Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, basically pertaining to three different areas: wealth building, commodities, and or financial topics. So let's dive in, take a look, see what people are sharing, and I'll share my opinion as we go through it. If you want to follow me, it's @_finance. And if you want to join our community, finding-value.com, I dive deeper into all this stuff, looking for potential investment opportunities. I'm really looking at stuff that gives us leverage, companies that provide a lot of upside leverage to the price moves. You do have to have a pretty strong stomach. Lots of volatility is expected with these kind of small to mid cap companies. I do prioritize risk versus reward. And then I build a portfolio of about 6, 7, 8 different sectors for this commodity bull market that is mainly commodity driven. It doesn't mean you have to allocate everything to it, but it's looking for undervaluation, waiting for that undervaluation to revalue itself upward in the market conditions that are conducive for commodities to go up under. If you're interested in learning about that, type in special for the coupon code, 50% off the first month only, and a larger discount on the yearly membership. You can always switch to a yearly if you'd like. We're going to start with David Burrows. He says, do not underestimate what can happen in a gold bull market. What gets overbought can stay overbought. Totally agree. See, a lot of people, they're looking at MACDs, they're looking at relative strength indicators, look at all these indicators. It's like, guys, time out. When you get these big bull markets, what can happen is you will stay in this upper portion for a long time during the bull markets. This was 2000 to 2002. Then we stayed in the bull market a lot in the later 2000s. So just because we're moving up and we're going to elevated levels does not mean that we have to turn around. This could go up for a long time. And this is AEM, a mining company that he's showing in this particular example here. HFI Research says, here's something extremely interesting. At the end of 2023, Exxon had 1.2 billion barrels of crude oil for proved reserve, and Pioneer had 0.955 billion barrels. At the end of 2024, it was 1.874 billion barrels. Exxon revised down proved reserve for crude oil by 289 million barrels. The big boys are going to struggle to keep their reserves up, I think, especially measured in crude oil, not natural gas. So I think the big boys, ConocoPhillips, Chevron, Shell, BP, all those types of companies, they're going to struggle to replace reserves. I think the sweet spot is in companies that are smaller than these big boys. They're still going to go up. I just don't think they're going to go up as much as some of the small and mid caps that still have room to grow reserves and still have room to grow production. Those will be, I think, the best investments over the next, like, say, 20 years will be these small cap companies, small to mid cap companies that can grow production in a world that's going to be, I think, starved for energy. Sam Gatling says, I doubt you own enough silver. So silver futures, 80 peak, 2011 peak, and here we are really close to another breakout. Now, you could say when we start to leave beyond 35, that from a closing price perspective, we are starting to break out on longer time frames, like a yearly close time frame, quarterly close time frames. When we break out, there's not much resistance, so we could run a big, big way. This pattern started in 1980. So keep in mind that this isn't going to come around often. You're probably going to get this one shot at making the best of this. I own enough silver, guys. I bought enough. I don't even know if I can store anymore. It's getting pretty dang full where I store it. So what I'll say is I've been preparing for this move since 2018. I'm loaded to the gills. Yes, I've got speculative companies. Yes, I've got mining companies. Yes, I've got the physical. And no, it's not my entire net worth, not even close. So it's an idea. It's playing out beautifully. And I hope it changes the lives of people that are participating in it, is what I'll say. Silver, I think, is going to make a big move here. How much? I think we're going multi $100 in silver, but this is what people get confused. When I say that, that doesn't mean it happens in 1 year. It doesn't mean it just goes straight there, like it gaps higher to $200 or $300, or even maybe $1,000. I don't know wherever it ends up. This is a long, big picture. This is a huge pattern, and a huge pattern sometimes takes a little bit of time. Sometimes they don't. Sometimes they rip. I don't know what we'll do. Neither does anyone else. But what I can say is, when you're positioned like this, I'm long. I'm super long. I'm ready for this. I've been buying it for years. I've really been positioned for it. And then, yeah, the miners, I've purchased that more recently than the physical metals. But this is it. This is like a once in a generation lifetime opportunity for at least this asset class to do it. There'll be other opportunities, obviously, in other asset classes, but this one has taken since 1980 really to develop. Even the 70s, the lead in for the cup and handle. Joseph Brown says, heads up that people calling a real estate crash are posting new home sales charts right now. Below is all active listings, new and existing. The number of homes for sale is almost back to where it was in 2019. And we're still super low in inventory. I don't understand the inabilities for people to understand data. I don't understand it. Sales, yes, sales is a function of volume being moved. Inventories is generally what sets the price. So what I see is affordability, having an issue with affordability for most people, and then no one wanting to sell any homes. So you're kind of in a market that's stuck. I don't think it's going to go up a whole bunch, and I don't think it's going to go down a whole bunch. So it's stuck with affordability. They're not going to lower rates and moonshot housing. I mean, if you were to lower rates, this is how you know if you're in a bull market or a bear market of real estate. If you lower rates to 2% right now, and your mortgage rates were let's say mortgage rates were like 3%, would the housing market go up or down? If the answer is it would go up, you're in a bull market. If it goes down with interest rates, you're in a hyper supply phase, you're in a recession, and the real estate market will basically go sideways or maybe slightly lower. Most of the time, it just goes sideways. It doesn't do anything. Everyone calling for like a 30-40% crash in house prices, they haven't looked at the real estate market back even to the 1930s. There's only 2 times in history that we've fallen that amount. It was during the Great Depression, and the Great Depression was driven by deleveraging in the banks from real estate. And then it was 2008, which was deleveraging in the system from real estate. We aren't going to delever. There's going to be no deleveraging because you need bad loans. There's no bad loans. And there's no homes in inventory. So I don't know. I don't know what they're looking at. They're just making stuff up, just making it up. Oil volatility is on sale. Goldman believes the risks are to the upside. Near-term sanctions might push Brent to $85 a barrel in the near term. We've got all these people trying to make predictions. I've heard a lot of people, we're going 50, 35, 50 a barrel. Guys, do you know what that's going to do to supply? Do you know on the other end of that what that would do to a price spike of oil? If we go to 35, I mean, we would lose, it depends how long it stays down there. If it does go that low, we would lose millions of barrels of production around the world. And demand has been going up, not down. So good luck with that. That's what I'll say. Investment wisdom. This is from Chuck. Chuck says, my biggest investment mistakes were not buying enough of the ones that were really good. My question is, how do you know something is really good before it makes its move? what are the characteristics that you're looking for? Obviously, you want to buy strong companies. The characteristics that I look for are generally who can grow production in a commodity bull market, and they're generally high cost producers, which gives you insane amounts of leverage. Um, I've purchased quite a bit in those companies. So I think I've got a good portfolio, but you won't know until after the bull market is done. I don't think with certainty that the largest companies will have the highest returns. I don't think that the lowest cost producers will be the best returning companies. That's what I do know. But looking at the higher cost producers, you got to be picky, and you could choose high cost producers that just don't pan out very well. Too much debt. Maybe their management team is not that good and they can't grow the company that well. Maybe their assets just are crap. Maybe. Jasper says all metals are poised for higher prices over the next decade. Many decades with huge underinvestment in the sector and increasing regulations and environmental rules makes it nearly impossible to mine stuff. Supply and demand always rules. It makes me think that I should go out and buy a bunch of physical metals. Wait, that's already what I do. Why? Regulations and environmental rules. I think we're going to also see a bunch of taxes and or nationalization or royalties or whatever it is. When these prices start to move up, people are going to get mad. And they're going to be like, these people shouldn't be able to make this amount of money off the minerals. So I think there's going to be that's coming. The Depending on what it is, there could be a squeeze in equipment, and I don't think they're going to put taxes or royalties on equipment. So I think that you could play it with the picks and shovels, so to speak, of a lot of these commodities, and I think you could do pretty well. So I'm having a little bit of exposure to both. A little bit of exposure to both. Warren Buffett says, bad news is an investor's best friend. It lets you buy at a marked down price. So someone always asks me, what's the catalyst for this to move higher? Bad news is your catalyst for when you should buy. Wait a minute, that doesn't make any sense. Bad news, bad sentiment is your catalyst for a long-term investor. Does that make sense? That goes counter to absolutely everything that's counter to what everybody thinks. You want to buy when it's low and you want to sell when it's high. The news is an extension of sentiment. Bad news is an investor's best friend. Bad news is bad sentiment. Peter Schiff says the idea that a rising dollar will take some of the sting out of the tariffs for U.S. consumers is already being proven false. The dollar is actually selling off on tariff talk and will fall even more as they are fully implemented. This will compound the pain for U.S. consumers. I don't know if tariffs are the driver of the dollar making its moves. I think it's money printing and the situation that America is in with its debt. So I think tariffs are there, and I'll say this, guys. I think tariffs are a really bad idea. If I were to do something, I would eliminate corporate taxes. I would eliminate corporate taxes. I would eliminate the Federal Reserve. I would get rid of everything and all of this stealing through the currency. I would eliminate taxes to draw people into or companies into the country. I want people to open companies here, and tax on a corporate entity. It's just all that's going to do is I don't know if people have figured this out yet. Corporations don't pay taxes. None of them do. What they do is they have their customers pay the tax through the price of the product. So they try to open up in the lowest tax areas to be the most competitive to sell on a worldwide platform. And if you've got 30 or 40% taxes, corporate taxes in a certain country, more companies are going to move away from high taxes because they're less competitive because they have to put that tax in the price of the product, which means that the products cost more on the worldwide marketplace. So a tariff on importing things isn't good because there isn't a lot of fully integrated companies, vertically integrated companies in America. What we do is we import a lot of stuff in, we build, and then we sell something. So really, all they're doing is we're just increasing the cost of the total product in America. It doesn't do anything for the competitiveness on a worldwide. Now, I think what they're trying to do is get more companies to open up in America to eliminate the tariff that they would have to pay if they weren't based here. But a lot of the companies are not vertically integrated. So they're trying to get more of the manufacturing back in America and try to vertically integrate it. It may or may not work. I don't know. But a lot of the commodities, there's a lot of commodities that we do import. With all the job owning from Trump and Bessent to bring down yields are going parabolic. Yeah, it's because they don't control the market, guys. The market controls them. They're trying to job own it all down. Our energy is about to rally. It beats me, but don't go to sleep. This is your XLE seasonality, and this is where we're entering the strong part of the year for seasonality in energy. An ability to detach yourself from the crowd. I don't know to what extent that it's innate or to what extent that it's learned, but that's a quality you need, says Warren Buffett, to detach yourself from the crowd. I think it's partially innate, and I also think it's partially learned. It's a combination of both. What I see, most everyone are just parrots. They just parrot the same crap of what they heard. They are a collection of cliches and ideas that they listen to or read, and then they just parrot it like it's their own. There's no real thinking going on underneath. Eric Nuttall says there is no energy transition. He just talks about increasing demand for energy, and then the mix of it is just moving around. Another one from Eric Nuttall. He says, wonder why sentiment remains so poor. Energy ignorant articles like this, which we strongly disagree with, reality will ultimately prevail. And this is U.S. shale can live with $50 per barrel oil. Most U.S. shale plays can generate strong returns at $50 oil. Guys, this is just lies. Half the crap that they feed people is just garbage. They're trying to make this up. They want people to be negative on oil. So what they do is they create articles like, oh yeah, they can do this and they can do that. It's a bunch of lies. They are not profitable at $50 a barrel. I'm sorry to say that. Drill baby drill, more like decline baby decline. And this is why they can't make money even at 70 something dollars a barrel. They can't make money. Why? We're seeing U.S. crude oil production decline. If they can make so much money, why is it declining? Why? Here's a question for all of you guys that think oil is going to go down. If oil is so bearish, then why are all our inventories so low? Why is production declining? It must mean that oil price is too low if inventories are below averages. So that's number one. Number two, oil price is too low to increase production because production is declining. Are those stated facts? I think so. Logan says 119,000 completed homes for sale today. 4 million active listings in 2007. Look at that, guys. Yeah, that's a huge glut. That's what a glut looks like. This is what a shortage looks like. So we're in a shortage of homes. People can't afford them. Home sales are low. Tell me how we're in a bubble. Tell me how we're in a bubble. Christine says, also notice how increasing permitting and reducing emission regulations doesn't come close to offsetting the tariff concerns. Those were false flags. We're getting a lot of news out here. It seems like half the crap that I read is garbage. It's lies. It's like they're trying to manipulate the mass, the herd. And I'm not going to read through all this, but the key word to describe 2025 so far is uncertainty. This is from the exploration production E&P firms. There cannot be U.S. energy dominance in $50 per barrel oil. This is not energy dominance. Trade and tariff uncertainty are making planning difficult. The administration's chaos is a disaster. The administration tariffs immediately increased the cost of our casing and tubing by 25%. The threat of $50 oil prices by the administration has caused our firm to reduce its 25-26 capital expenditures. Drill Baby Drill does not work at $50 per barrel oil. I've never felt more uncertain about our business in my entire 40-plus year career. Our abilities to plan operations for any meaningful amount of time in the future has been severely diminished. The only certainty right now is uncertainty. I'm just going to say this, a great leader and great leadership provides a stable vision. What he's doing with the tariffs, on, off, doing this, shift, turn. Guys, that's not how you run a country. That's clown world. And what that does is it provides uncertainty all across the board for all of these industries. Uncertainty is what you don't want. We would be better off if you just said, we're doing tariffs, this is what they are, this is the starting point, done. And then they can actually plan. The companies need time to plan. They need time to figure out what they can afford. If it's $70 a barrel oil and they put tariffs on steel, which these guys consume a bunch of steel in their piping, they might reduce drilling dramatically. If they reduce drilling dramatically, well, then $70 per barrel oil needs to go to $100 per barrel oil. His tariffs would ultimately increase the price of oil in the long term. And Americans will pay for it. Sahara. So I went over that last time. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Specialist the coupon code. We've got a question and answer session coming up on Saturday, 7 a.m. Mountain Time. If you guys like to attend. But that's all I've got for today, guys. So we'll catch you next time. This is Finding Value.